Hi there, traders. This is Brad Gilbert with the FX Market Insight for Monday, the 21st of October. All right, now as we kick off the start of the trading week, early days here in the Asian session, it's a good time to get tuned up. Now, what are we sort of looking at? Well, it's obviously a bit of a continuation of from last week. No major hiccups, which is good. There's been a few little minor gaps on the open, but nothing too serious. Obviously, the core market drivers in play. The geopolitical events are dominating. Brexit, it's sort of a bit all over the place. If anything, it's still the positive euphoria from last week still kicking in. The Trump impeachment proceedings, okay, it's still building momentum at this point. So that's going to, I think it's something we have to be keeping a close eye on for down the track, but it is there. And obviously the China-US trade issue, we're hoping for some information and answers on that one. All right, now as you start the week, and the first thing you should really be doing is actually just having a look around the market. That's why you have Reuters Metastock, or if you've got Bloomberg, whatever it may be. Check out what news has been going out there. See if there's a bit of a connection from last week. And then you'll see a couple of maybe opinion articles. Dollar weak as Brexit deal boosts euro sterling. Draghi's got his last meeting coming up. Okay, so he walks out on November the 1st. It's going to be a bit of a sad day. I think he's done a good job, despite some of his colleagues to the contrary. We've got that Canadian election, something to keep an eye on there. And then you sort of go in, if you want to go into more detail around what's happening with Brexit. It's still not done, obviously, but there's a few weird things happening there. But as I said, the positive euphoria, and then you've got some Trump impeachment proceedings. The one sort of odd thing that I haven't seen here is actually more details about the US-China trade dispute or issue, and that's a little bit odd. Now, if I just bring you over, have a look at the charts, give you some sort of technical perspective. Aussie and Kiwi, well, these currencies just slowly cruising to the top side. There's no levels up here, right? This is what I was sort of focusing on last week, saying, we could see a decent short squeeze in the Aussie and Kiwi in particular, because we don't have any resistance levels for quite a couple hundred points, I think it is. So just keep an eye on that. The Chinese numbers from Friday, there was the GDP, retail sales, industrial output, industrial production, urban investments, all these sorts of things. They pretty much came out as expected. So didn't give the Aussie that clear boost to the top side. But you know what? There's enough US dollar weakness at the moment. It has broken down on all sort of time frames against the index. And that's really, to me, I think which is where we're going to start seeing dollar yen slide to the downside. It's overdue. It's the only dollar pair that isn't going down at this point. And I think it's a sitting target, although we haven't really got the momentum to really give it a hard push. So just keep an eye on a couple of these levels, maybe down through 108.20 could be the catalyst. And as I mentioned, euro up above 111.40. You know what? It's sitting pretty comfortable at this stage. I still think it goes down, but you can't deny the technical picture, which is sort of up on the hourlies and dailies. Here's sterling. What a hell of a massive week from 122 to 130. A nice 800-point move. Hard to read at this point, but it is still, there's a lot of positive sentiment built into it now. So if we start to see it unravel, Brexit, like a no-deal Brexit, well, then we may see sterling back at 125 very quickly. Now, dollar CAD, it's starting to actually form a bit more shape and actually look a bit more orderly in the move to the downside. So you can see how this support line down here, it's broken down through that. Now it's just acting as resistance, which you would expect. It's looking pretty good. All we need is oil to rally. I think you'll see dollar CAD continue to slide to the downside. But of course, we do have that Canadian election on over the weekend today. I think the numbers get added up and we should work out who's in government. That's usually not a massive thing for the currencies. So don't sort of jump up and down about dollar CAD being all over the place, because it's not usually a change or a big impact on the currencies. Now, here's the analysis. So the dollar index, obviously with sterling and euro moving to the top side, that's now breaking clearly down. If anything, sterling, which has been like a bit of a dark horse, is probably dominating the currencies at this point. You've got the Aussie and Kiwi. Now, they are moving sort of slowly upwards against the overall fundamental central bank sentiment. So that's a little bit confusing. But as I mentioned, the dollar pairs themselves, well, the dollar index is one, but dollar CAD and dollar Swiss looking very comfortable moving to the downside. I'd like to see these weekly charts break to the downside. Then we can get some real clear trading opportunities. And the only real major update here is dollar yen, which was, on the hourly still moving topside. Now it's breaking down. I think this is the pair that could potentially give us a trading opportunity. If it's not dollar yen, it'll be the other yen crosses. And you may want to check out the analyst pick there underneath. Now, as you get prepared for the week ahead, right, looking at the upcoming major events is the key part to understanding where momentum may come from. Okay, so there's not a hell of a lot out on the Monday, which is pretty usual. Keep an eye on that CAD federal election, or if you've got positions, just be aware of it. Okay, and the actual week has got pretty good shape because you can actually see here Monday, come into Tuesday, we've got dollar CAD obviously going to be the major focus, or CAD crosses, retail sales, and the Bank of Canada Business Outlook survey. Makes it easier to concentrate on which pairs to be looking at. Okay, when you've got the data set out of this. We've got the RBA Assistant Governor DeBell speaking. Come into Wednesday, there's not much on. And then you come into Thursday's trading and it's all about the euro. Okay, from here on in, you've got the ECB rate decision. As it is, it's Mario Draghi's last meeting as the ECB president. And you've got a press conference. That runs into the US durable goods, which is at the same time as the press conference, makes it a little bit tricky. But euro should be flying around by that stage. And then followed up with a flash manufacturing PMI. Come into Friday, then you've got the German IFO business climate numbers. So all in all, it's a very structured week. Dollar CAD the focus, then switching pretty much over to euro and euro crosses. And that should be where we sort of, focus our attention. There's not too much to get overexcited about on the numbers until we get into Tuesday. But I am actually getting reasonably excited with the formation here of the major pairs. Aussie and Kiwi sort of lagging at this point, but I think Euro's got a lot in it. And being back at 111, where are we? 111 sort of 50. It's got to be a chance up here somewhere to be getting short. But what we are going to be watching very closely, obviously, is the ECB, and then you've got that handover in 10 days to Christine Lagarde, right, who's going to take over the ECB presidency. So that's where we are, guys. It's looking pretty good, but we're just waiting for a little bit more of a kicker to get that momentum clearer. And I think it may be dollar yen, maybe the pair, which it looks like a little bit odd at the moment, but I would suspect when it breaks down, it'll break down on the hourlies and dailies, and then we'll get some movement. All right, guys, that's it for me. Pretty slow start expected for Mondays, as per usual. So don't get yourself all bent out of shape loading up on any major pairs because you're really waiting for that connection from last week's trading, get all markets to open, and then you can feel a bit more confident with which way they're actually going. All right, guys, have a good one. We'll catch you in the 247 trade zone. Cheerio.